results. Revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
And Fed policy will be driven by the pace of the data. State policy will remain accommodative for the
Futures
mix
off
of
the
tools.
sessions low, still down about 1% on the day for a little more than 4 pennies.
But about 10 years ago, I started moving away from the fundamental side of the business into the technical analysis and trading system side of the business, and built my very first trading system in 1999. And some remnants of that are still in what we're going to talk about today. So what I thought I would do is just spend a few minutes on what our trading system is all about. I'm sure you've read all kinds of things about high-frequency trading, and that's the ultimate in the world of trading systems. And I'm sure at the other extreme, you've read about, oh, don't trust these things because they're a black box, or they just curve fit something and they're going to blow up in your face. The reality, of course, is someplace in the middle. So let's talk about trading systems themselves. What is a trading system? First, it's simple. It's a set of algorithms, and they can be very simple to very complex. I would say that our trading systems that we use at SMB are of medium complexity. The key is it's not just throwing together some of your favorite indicators, saying, gee, I think I would like to do a moving average crossover. I'll buy when the fast moving average goes through the slow, and I have an MACD to confirm. It's not that simple, but that's what a lot of people start out doing, is something like that. The key to a trading system is it has to be vetted. It has to be tested and proven to be robust. And in fact, what I'm going to show you in a couple more slides is just some output from a sample we did here. And I'm not exaggerating, we did over 10,000 tests to generate the one little chart that you're going to see here in a couple of minutes. Obviously can't be done without a computer. But the key is it robust? And in our world of trading systems, what that means is that the trading system will work with most asset classes. In fact, we even test our trading system on things that we're not going to trade to make sure that it works. So we're primarily trading equities, so we'll test on commodities, or we'll test on FX. Or if we're building an FX system, we'll make sure that it also works on equities or on bonds, because we want the basics of the trading system to work no matter what the asset class is. We also want it to work well in all market conditions. Now, that doesn't mean that it will make a ton of money in all market conditions, but we don't want a system that just works in the bull market and falls apart in the bear market, or we don't want a system that in a bull and a bear is great, but in a sideways market it loses a ton of money. So it's got to work well in all the environments that we're faced with every day. And also it has to work with a random selection of assets. And what I mean by that is if you're building a system, let's say, for equities, you can't just say, well, I'll build it for Apple, and I'll check it on Hewlett-Packard, and I'll just double-check it on Citibank because it's something different. It has to work with a random set of security. So if you say, well, gee, I've got the system, I think it's working, I'll pick the 100 largest cap stocks in the market. Does it work with them? An arbitrary group. Or does it work with 100 low beta stocks? Or does it work with, maybe I want to look at the entire oil and gas sector. Does it work with that entire sector? Something arbitrary. Because if it doesn't work with an arbitrary group of stocks, it's probably not robust. It's probably going to blow up in your face. And it also has to work in most time frames. And again, even if you're not going to trade the specific time frames, let's say you're going to never do day trading. Well, test it with day trading anyway to make sure that it works. Because it's really important that we go through all of this before we start putting real money to work. Because what we're really doing here is we're trying to build something that is statistically significant. And what I mean by that is that you can run it on basically on any asset, in any market condition, with any random set of assets, and in any time frame. And in each of those cases, it should generate a set of statistics, not just returns, but statistics that say, I've got something I can put money against. And it's really crucial, because this is the step that differentiates a trading system from an idea. You might have an idea that some combination of moving averages or stochastics or whatever your favorite indicators are, that some group of them might be a trading system because you have watched them on the screen for the last year, and you've traded them off and on, and you've made some money and you've lost some money. But we're talking about tens of thousands of tests before we can say, maybe I'd put up the first $10 to see if this thing works. That's the real key.
Now,
Yeah.
Rick, just before you go on, just really curious about working well with most asset classes.
Mm-hmm.
That criterion. Are you saying that it's been found that if a system, I find it a little hard to believe that a system wouldn't be successful unless it worked for lots of asset classes. In other words, isn't it possible there's a system that just works really great for a particular asset class? And,
Oh, sure. Sure. No, that's a very good question. Absolutely. You might be developing something to work with FX,
mm-hmm.
and you're going to end up with something that is tailored, and we're going to talk about that in a second, tailoring. But there's something that's really tailored to FX. But if that's all you're ever going to trade, you're never going to look at an equity, you're never going to be tempted to do any options, you're not going to do any ETFs, it's really just FX, well then what I would say is make sure it works with every FX pair. Well,
right.
Don't say, well, it works just with the euro and the dollar. And don't say it's just with the dollar and the yen. There's 25 pairs. Make sure it works with all 25 of them. Because you need breadth. We'll come to the idea of customization in just a second. So hold the second half of that answer for just another second here.
Okay, great.
Okay? So now the question is how do we do all this? Well, obviously anything in a trading system, you have some parameters. Take something simple like a moving average crossover. What moving averages should you use? A 10 bar and a 20 bar, maybe a 10 and a 25, maybe a 10 and a 50, so on and so forth. And so you'll have parameters in your trading system, whatever they may be. They might be indicator-based, they might be price-based, they might be volume-based, they can be whatever it is, because the thing you're doing is taking an idea that you have based on your personal experience or maybe a book that you've read or what have you, and you now have to put it into practice and see what happens.
Thank you for watching this clip of our Options Tribe webinar. The rest of the recording is available on OptionsTribe.com. I'm Seth Freudberg, and I've been hosting the Options Tribe since May of 2011. We've brought in options experts from all over the world to make excellent presentations to our members. So go right now to OptionsTribe.com to learn more about options education, or you can send me an email at sfreudberg@smbcap.com.